Good morning, all. Welcome back at ICA classes. So, we have already started with application of accounting standards and near to completion now because only 3 years have been left. Earlier, we have already covered 10 years. So, welcome back at ICA classes. Very good, very good. Good morning, good morning. Hitesh, Rahul, Annie, Sudhanshu, Madhushiri, Gehenya, Karthik, very good. Sonika, Pooja, everyone, good morning. Send your presence, beta. So we are going to start with the doubts, if any there. If you have any doubts in the previous years, we have done last 20 years 28. So having any doubt in years 28, first of all, I would like to take that. After then, I would like to go for ES 24, discontinuing operations. When ready, Meghna, very good, very good. Many haven't sent their presence yet. Send your presence fast, beta. Good morning, fast, fast, very good. So, any doubts if you have in AS 28, please tell me. So we can proceed after that with the next AS. Expecting everything is clear because that AS was comparatively very easy and simple AS. If you will see other AS in comparison to those, AS 28 is much more conceptual and easy. Rahul, we have sufficient time. You need not to worry. Today, if AS is not completed, obviously 3 years have been left, so it is not going to be completed today. We have next lectures also because I will be available in the next lectures also. So there's no worry about it. I will first of all cover your AS and then I'll proceed to the next chapters. Because this is not a policy that you have to give an overview of each and everything and go fast in the next chapters. Always when we have to study, the concept is very simple. Do it properly, systematically. Accordingly, teaching should be in the same way. I would like to teach you in a proper way, in a logical way. So first of all, I will cover all the AS and then I will proceed. So next lecture will be for AS specifically maybe. You need not to worry. Okay, last AS 26 was done. Okay. So any doubt in AS 26? No doubts. Very good, very good. So I would like to go for AS 24, that is discontinuing operations. An important AS from examination point of view also. Madhushiri has a query. Which AS is very critical from examination point of view? My opinion is no AS is so critical that we can say that it is critical from examination point of view, because whenever we are doing any study, every study is really very simple. And if we'll assume it as simple, then we can do it in a proper way, because nothing is difficult in the world. You may see that people goes to Mount Everest and they say it was really a wonderful experience. They doesn't say it was really a difficult experience and we are unable to do it. So in the same way, I would like to tell you very clearly that you need not to worry that anything will be typical, because nothing is typical in this world. So let it be very much clear. I'm not going to say that this AS is typical and this AS is easy. Yeah, I will tell you this AS comes into your exam or this AS doesn't come into the exams too much. But for that purpose, you will have to go into the suggested answers. I already mentioned you that suggested answers are very important. You may also purchase 10-year from the market. In that 10-year, you will easily find which type of questions or which AS gives more weightage to your examination. So accordingly, you may do the questions. That will be a better option. Purchase from that market and do it. Because in your suggested answers, I have seen in ICA that is just for few years. only it is 3 or 4 years. So for the purpose of better practice, you need minimum 10 years that I expect. So suggested answers revise. One more thing is given to you in your with you, that is RTPs. So RTPs are also giving a good idea that which type of question will appear into your exams. So you must have to do RTPs also, beta. Let's try. Let's start with AS24, discontinuing operation. So the word itself defines it, discontinuing operation. What means for discontinuing, beta? Discontinuing means for the working, when we are saying that this is not a continuous system, because whenever a business is running in routine, it is called continuing business. But in case a business is going to be switched off or it has been switched off, it is a discontinuing. But here the word discontinuing operation means for what? So let's try to understand that also, because the word operation is mentioned, not the business is mentioned. So the word operation means for we are going to discontinue a part of the business, not the whole business. So that is the major important thing in this case. Yes. So here it is given to you. This is applicable to all discontinuing operations. All means any type of discontinuing operation will be considered for this purpose. Now the objective is what? The objective is to establish principles. Principles for what? Obviously for the discontinuing operations. Informations, reporting informations means principles for reporting information. Whatever information is to be reported to the users of financial statements, because you know it very well that our users are there which are using these financial statements. So whatever information is required to be reported to them, for that purpose, what will be the principle which is to be followed? And the concept is very clear. It will enhance the ability of users of financial statements to make projections, because we have already discussed in our first AS what is the concept of accounting. Accounting concept is very simple, the process of identifying, measuring, and communicating economic information to permit informed judgments and decisions by the users of accounts. So the target is very simple, that our users are there. We have to satisfy our users and they have to do forecastings, they have to take decisions. For that, they need economic information. So you have to provide them the economic information. So this economic information is for projection of an enterprise cash flow, earning generating capacity, and financial position. So all that is required by segregating about this discontinuing operation from information about continuing operation. Let's assume a business is there, like if we'll talk about any company except there's a company named XYZ Limited. Now this company is dealing in ready-made garments. This is their one segment. Another segment is there, that is grocery items. Another segment is there, that is sports items. So there are three segments of that XYZ Limited. Now XYZ Limited is going to close its sports segment. So this is a discontinuing operation. But these are going to be the continuing operations, because these are not going to be switched off. So ready-made garment and grocery items will continue. So while reporting, while giving information in the financial statements, you must have to keep information of continuing operations separately and discontinuing operations separately. You must not have to merge them with each other. If you will merge, it will be a problem for them. So don't merge them, don't merge them, keep it separate. That is a basic target. And the information is to be given so that they can take better decisions. They can find out the logical working. Let it be very much clear that this has been a decision by the management. Within the short span of time, we will understand what meant for the discontinuing proper form. Let's come to that. Hitesh, just wait, beta. I'll let it be clear to you. Just first of all, I would like to give you the definitions because the definitions are very much important. So we have a business that is an enterprise. Now this enterprise have a component which they are going to switch it off. Enterprise means XYZ Limited. And component means they have one component that is ready-made garment. There is another component that is uh, we have already discussed sports items. Third is grocery items. So they are going to switch it off. One of the operation that is they're going to switch off only the sports item. So that is a discontinuing operation. Why it is going to be switched off? That is not a reason to be discussed in this case. We are not going to discuss about the reason. We are going to discuss about the concept that this business is going to be closed, which information is required to be given for that particular business. Because the concept is not to discuss why it is going to be closed. The concept is this is going to be closed. Now, what meant for the closure that we have to discuss now? What meant for discontinuing that we have to discuss? Discontinuing meant for when we are going to dispose of entirely. Entirely means the maximum part, such as by selling the component in a single transaction or by demerger or spin-off of ownership of the component to the enterprise shareholders. That means for simple that this company is going to be switched off. This company is to be going. This company is going to dispose of their sports items by way of selling that complete segment to a one person, or by demerger of it from the real big business and selling it to someone else. It is not going to sell it in installment. It is going to sell it in toto. Means this is a sports department, and that sports department is completely sold off to a one company that is called in a single transaction. And then second is disposing of piecemeal. Means we are not selling it to a one person in a single transaction. Instead, we are selling it in parts. We are selling it in the market. We can say as and when people comes to us, we sell them, or as and when consultants or the mediators helps us to sell, we sell them, and settling our liabilities. Whatever the liabilities are, that we are settling individually. So that is a point. Terminating our through abandonment. Abandonment means we have once we have closed it, that's abandoned. Abandoned means kept separate. This has been closed and kept separate. When it will be sold, how it will be sold, whether it is sold today or after 1 year or 6 months, that is not yet clear. But we have terminated, we have closed the operations. We are not going to continue that work. Abandoned means kept separate, terminate means closed. So the work has been closed. In Hindi, जब एंटरप्राइज आप एक एंटरप्राइज अपने एक सेगमेंट को किसी एक पर्सन को, किसी एक बिजनेस को, किसी एक पर्टिकुलर ऑर्गेनाइजेशन को सेल कर देती है, उसे सिंगल ट्रांजैक्शन में सेल कहा जाएगा. दूसरा, अगर वो पार्ट्स में सेल करती है, पार्ट्स में मींस वो अपने एसेट्स को अलग अलग लोगों को सेल कर रही है, लाइबिलिटीज को अलग अलग सेटल कर रही है. और तीसरा, अगर वो अपने काम को बंद करके उसको रख देती है कि हाँ जी ये वाला काम तुमने करना ही नहीं है, अब उसको सेल किया नहीं किया, दैट इज नॉट ए पार्ट, that has been kept separate. That's it. So this is called terminating through abandonment. Am I clear? But this is not the whole. Actually, let it be very much clear that we are discussing three parts of it. So three conditions are there which are to be satisfied. A, any out of these three. In case of A, either this or this or this. But there is an and means A, B. So this must be followed, this must be followed, and obviously there is a C that must be followed. that represents a separate major line of business. The concept is very much clear that we are going to we are going to switch off a major line of our business. We are not going to close a part of the business which is not a separate business segment. It must be a separate business segment. Major line of business or geographic area of operation means we are going to switch off a major part of the business that is obviously just like a segment, whatever we are reporting as a segment. And this is again and that can be distinguished operationally and for financial reporting purpose. Number of times it happens we are going to switch off a machinery. We are going to switch off a machinery that is not a segment. Segment means for the complete operation of the business. Like I'm working in India, Canada, Australia, USA, UK. So these are my geographical segment. I'm going to switch off my operations in UK. So this is called discontinuing operation. I'm going to switch off sports segment. This is called discontinuing operation. But if I'm saying that I'm closing few of my stores in UK, I'm not going to switch off the complete operations in UK. Instead, I am going to switch off just few stores in UK. You may say we have 50 stores. We are going to switch off 10 stores or 15 stores or 20 stores. That doesn't mean for discontinuing operation. Let it be very much clear. That is not going to be covered in AS24. In AS24, we'll have to cover only those which is a proper segment, which is a proper system, and it must be distinguishable from other segments from operations and for financial reporting purpose. If it is not possible that they can be distinguished separately due to any reason, that their assets are combined, we have joint assets, like if we are talking about three segments, sports, grocery, and the third is ready-made. Now, they are kept at one place only. All the assets are correlated with each other. If I'll sell one of the asset, remaining will be automatically affected because my infrastructure is developed in such a way that they are correlated with each other. I can't, or their presentation is given in such a way that sports item are looking part of the ready-made garment and other because it is only one you may say one particular area where it has been where it has been kept and they have been kept with each other by merging with each other, so that is not assumed as a separate business segment. In that case we can't distinguish it from others from operation point of view. And second is from financial reporting that we must have to let it be clear we have to apply AS18. We have to go for a segment reporting. If that is covered under segmentation only then we can close it off. So this is a very good point that wherever segment is a separate segment that is given here, a reportable business segment of geographical segment as defined in ES70 would normally satisfy criteria and would represent a separate major line of business. A part of such a segment may also satisfy criteria and it would represent a separate major line of business that operates in a single business or geographical segment which doesn't report segment information. A major product or service may also satisfy the criteria. Means if segment is not there, but it is a major part of the business. Like I am talking about a thing that we are going to close it out of the grocery items. I am going to close our eatables. So eatable is a major part of our business, and it can be separated by a proper process because out of all the items which I am dealing in grocery, I am going to close off all those which are related to eatables or all those which are I'm going to close the flour atta. I'm going to close the um, flour items, atta items, major part of wheat items. We can say wheat items are going to be closed off like that. Spin off, where it is better? Spin off. Yeah. Spin off means that has been kept separate, that has been made separate from others. That is called spin off. A few examples are taken here for discontinuing operation. That there is a product line which has been gradually or evolutionarily phasing out. That meant for we are going to close it slowly and steady. We are not going to close it today only. We are going to close it by step process. Means we are going to make a sale of that particular item regularly. We are trying to dispose of all our stock, only then we will close it out. So obviously we are going to sell it in that way. Or if we are producing that item, so we have stopped making production of that item, but the item is lying in our godowns, in our showrooms, are going to be sold off. Discontinuing, even if relatively abruptly, several products within an ongoing line of business. Well, it may be for many products also, shifting of some production or marketing activities for a particular line of business from one location to another. When we are shifting it from one location to another, that may also be covered under a discontinuing operation, because that operation is going to be discontinued from one location. It will be shifted to another location. So that may be also called it closing of a facility to achieve productivity improvement or other cost savings. So that is a simple thing. Another example is we are going to sell our subsidiary whose activities are similar to those of the parent. The component may be distinguished so operationally and for financial purpose. Criteria C of the definition, if all the following conditions are met. First condition is operating assets and liabilities of the company can be directly attributable. Already discussed, its revenue can be directly attributable. Means revenue can be allocated, operating assets and liabilities can be separated, and a majority of its operating expenses. Means three things are there. Expenses can be allocated, incomes can be allocated, assets and liabilities can be allocated. Only then we can say that the item can be, this segment can be, or this operation can be distinguished operationally and financially reporting purpose. So if an operation cannot be kept separate, can be its assets and liabilities are not separate, or its revenue is combined, like we are selling a grocery item by way of 5 kg of sugar will be given with one gene spent. If you will purchase one gene spent, we are giving you 5 kg of this item, or we are giving this item with this item, and those items are of different segments. So we are trying to correlate, we are going to trying to sell them. Like if I'm selling us, I'm dealing in cars and two-wheelers also. So my policy is very simple, that whenever I'm selling a car, with one car I'm giving two motorbikes. So what it meant for, my motorbikes are given in addition to cars. So these are jointly made with each other, they are combined with each other. So these type of items cannot be separated because their revenue cannot be separated, their expenses cannot be separated. If it is possible that we can separate them, there's no problem at all. So that base is to be decided by us, that concept is to be decided by us. We must have to check it out whether that base is acceptable to the system or not, whether that base can be separated properly or not, directly attributable to a component. So all that is given to you. Some disclosures are to be given for this purpose. Initial disclosure we are saying. So this is to be given for the purpose that we are going to discontinue this operation. So when we are going to discontinue, it is not yet discontinued. Initial disclosure event. So what are to be disclosed? The initial disclosure is the occurrence of one of the following, whichever occurs earlier. So that he is interested to define you with respect to discontinuing operations. The initial disclosure event is the occurrence or one of the following which occur earlier. Read this once, read it. I assume whatever we have studied till now, that is clear. I've just stopped so that you can absorb it. You can absorb it, whatever we have discussed. Absorption is required. So here, what is to be disclosed initially with respect to discontinuing operations? The initial disclosure event is the occurrence of one of the following, whichever occur earlier. The enterprise has entered into means when we will assume that it is required to be disclosed, when it will be finalized that we must have to give some disclosure that this is going to be happen. So when an enterprise enter into binding sale agreement, because condition number A was there that we may enter into it as a single plan of sale. So if that has been happened, that we have entered into a binding agreement with someone, then obviously it is required to be disclosed. Or not and keep it into your mind. The board of directors have approved it that we are going to discontinue operation and made an announcement of the plan. So this is and means formal plan is made, approval is done, approval is already done, and announcement is already done. Because if announcement is not done, they may change it later on, and that will be a problem for us. Now, what means for the formal plan that he is interested to define that this is going to be disposed of, this is a particular asset which is going to be disposed of. What is the method of disposal? Period for completion of disposal, principal locations affected, what will be the effect on our business, what will be the expected outcome of that particular sale. Consider to have made the announcement of a detailed formal plan for discontinuation if it has made the announced the main features of the plan, even if that has not been defined properly, but to maximum extent that has been made clear to the public that we are going to discontinue this. That has been even given by way of a hint. It is not given properly, but it is given by way of a hint because they have discussed the plan of disposal. They have automatically that it meant for we are going to sell it. So that is clear. Recognition and Meyer. When it is going to be recognized, what will be the measurement? How it will be valued in money terms? That is not a part of this ES. Let it be very much clear. This is also a good thing that what is to be disclosed. So whenever we are going to disclose it, because earlier what we have discussed, presentation and disclosure. This was the identification, because the process of identifying, measuring, and communicating economic information to permit informed judgment. So this is a process of identification. We are going to identify this. What it means for, we are just finalizing when it is required to be disclosed that the unit is going to be switched off. So this is the those these are the those conditions, or these are those you may say events which helps us to identify this is going to be disclosed, this is going to be discontinued, hence disclosed. So these are the hints. Next part is recognition, that we have to recognize it, that is not a part of this particular year's measurement, that is not a part of this. And then we have to communicate it to the user. Communication meant for disclosure. So what is to be disclosed, which information is required to be disclosed, that we are going to discuss. बेटा 3 पार्ट्स होते हैं किसी भी अकाउंटिंग में, कंसेप्ट के अकाउंट में आइडेंटिफाई करते हैं सबसे पहले, फिर हम मेजर करते हैं, फिर हम कम्युनिकेट करते हैं. तो सबसे पहले तो हमने आइडेंटिफाई किया कि हमने ये डिसकंटिन्यू होने जा रहा है ऑपरेशन, तो हमें इसका डिस्क्लोजर देना जरूरी है. तो वो डिस्क्लोजर क्या देना है वो डिस्कस करेंगे. So disclosure is very simple. We have to give description of the discontinuing operation, that is details of that operation. Also define that the business or geographical segment in which it is reported as per AS 17, because we have already done AS 17. So where it has been reported there, that is to be disclosed. The nature and date of the initial disclosure event, when that event has been happened, due to which we are expecting that this is going to be disposed of, this is going to be discontinued. Then how much time will be taken to dispose it of? What is the carrying amount of those assets and liabilities in our books of accounts which are going to be disposed of? What is the expected revenue we are getting from it? What is the expenses we are incurring on that? So that whatever tax, the amount of pre-tax profits or losses from ordinary activities attributable just during the in the current year, how much profit we have earned out of it before tax. How much was the profit before tax? And whatever the income tax expenses related thereto. Net cash flows attributable to the operation, to the operating, investing, and financing activities, that is cash flow statement of that particular part. Other than initial disclosure, what is required to be disclosed, and where it is to be disclosed. That is a very important part. It is to be disclosed in the notes to accounts. We know it very well. We are preparing notes to the financial statements. Then one more thing is there which is very important, which is to be disclosed on the face of the financial statements. What it is, that is the amount of profit before tax or the loss before tax we bear from that, we earn from that discontinuing operation in the last year, and the income tax paid for that in the last year. Means last year means previous year. When it is going to be disposed of in that year or in the previous latest information, whatever it is, whatever profit we have earned out of it, whatever expenses or losses we have bear, and simultaneously one more thing is there, that income tax, whatever we have paid on it or payable on it, that is to be shown. In addition to that, some other disclosures are also there. This AS is specifically regarding disclosure. Let it be very much clear. We have to identify this. This is a discontinuing operation, and this is required to be disclosed. That's it. Yes, we have to identify that this is required to be discontinued or not. That is an important part. That is with the help of the conditions, with the help of the knowledge we have collected from this AS. When it is already agreed that this is going to be disposed of by way of an agreement with someone, then whatever expected loss or profit we will earn out of its sale of assets or settlement of liabilities, that is to be disclosed. Whatever expected the amount of the pre-tax gain or loss, income tax expenses relating to the gain or loss, etc., is to be disclosed. Net selling price or range of prices of those assets, if those are to be sold off to different enterprises. So all that is to be disclosed. And whenever, because this is not done within a year, let it be very much clear. Whenever we discontinue the operation, it doesn't mean for that we are going to sell it within just 1 day or 2 days. It will take 6 months, 1 year, 3 years, 5 years, 10 years, because big assets are there, many liabilities are there, big units are there. It takes long time to sell it off. Due to that reason, if we have disclosed something at the end of this year, and if we have disclosed it on the basis of some information whatever is available to us, in future if something has been changed, because when we will do the work in actual, or whenever more experience, more knowledge will come to us, obviously many information is required to be updated, so that is to be updated properly. If an enterprise abandoned or withdraw from a plan, that is a very important point. Earlier we have planned that we have to sell it, but later on we have changed the plan even, so that is also to be disclosed. Reasons of it, facts of it, that is required to be disclosed. If we are going to discontinue two or more than two operations, then obviously each and every operation is to be disclosed separately. One thing is very good, that is restatement of prior periods, comparative informations. That has already been discussed. That we have to show assets, liabilities, revenue, expenses, cash flow of that particular item separately. But he says for that you must have to prepare a comparative information for prior periods that is presented in financial statement. You have to prepare a comparative information statement also of the prior periods, not of 1 year. He says 2 or 3 years are required to be disclosed out by preparing a comparative information. After the initial disclosure event should be restated to segregate assets, liabilities, revenues, etc. So all that is to be disclosed. These are just disclosure requirement, not going to discuss in detail because this is just a wastage of time. Normal things are there. This is just a theory part. Yes, one more thing is here in ES 24-25 interim financial reporting, which is not a part of our syllabus even. Disclosure is required, and which type of disclosure is there? As per AS 25, it is to be required to be disclosed that any significant activity or event has been done in relation to that particular discontinuing operation. It means for if on 31st of March 2021, sorry, we have closed our books of accounts on 1st of June 22, we have decided to discontinue a particular operation. So he says during this period, if any big event has been done, that must be reported properly. In relation to the discontinuing operation, we have decided it on 1st of June, but regarding that part of the business for which we are talking, if any big thing has been happened during this period, big event, significant means which have a material impact on the decision making of the users. So anything which have a material impact on the decision making of the users is required to be disclosed separately. Any significant changes in the amount or timing of cash flow means if we have decided and made an agreement with XYZ has entered into an agreement with A Limited that it is going to be going to dispose of its one of its operation to him for rupees 100 crores. Now after 1 year or after 6 months we have decided no, it is not going to be sold for rupees 100 crores, it is going to be sold for 80 crores or 150 crores. Then it is required to be disclosed. Value change is made, timing change is made. Earlier we have decided that the payment is to be made and the discontinuation has been done and the transfer will be made on this date. The dates are finalized. Later on we have changed the dates. So that is required to be disclosed with. I've discussed each and every part of the disclosure this time because this AS is more important from disclosure point of view. I think this is clear to everyone. Any doubts to anyone? Karthik says, will it also require the assets and liabilities to be recorded at realizable value? Because going concern is also affected. Exactly, beta, that we are talking. This is 100% right. We must have to show them at realizable value as we are doing otherwise. I think this AS is clear to everyone. Not too much practical questions are there. You may just get theoretical questions in your exam that we have decided that this segment is going to be reported. Significant means beta, which is changing the effect of any information, which changes the effect of decision making of the user. Like today's significant thing is that I'll continue teaching you accounting standard until your all AS is not completed. If I'll not give this information to you, what will happen? You will assume that in the next lecture, sir will not continue the AS. If AS is not completed today, even if sir will not continue, but I'm telling you that I'll continue. So this is the significant information which I have given to you. So any significant information, any significant activity which changes the decision of the user, which effect on the decision of the user is called a significant. In business also it happens. We have planned to sell it to A Limited, but after that we have decided that, or we have sold a particular one of the asset to someone else, not to A Limited. Even it has been decided earlier, or earlier it has been decided that it will be sold to A Limited. Later on, we have changed it that it will not be sold to A Limited. Instead, we will sell it in piecemeal. Means we will sell it personally. We will sell each and every asset personally. We will pay off liabilities personally. Earlier, it has been decided that everything is to be done by A Limited. So this is a significant activity. Anything else? I'm giving you 5 minutes, beta. In 5 minutes, you have to review this AS. Any doubts I would like to take, then I will go to the next AS. So this is a 5 minutes time given to you for refreshing yourself. Any doubt? Take it easy, read it very easily, slowly and steady, and send me the doubts. Allow me to have a 5 minutes break also. I'm interested to switch off my video for 5 minutes. You may send me the queries regularly, no matters. I am available. Just I am switching off my video so that I can take a break for 5 minutes. No, sir, no. This is given to the just for the information of students. You need not to have, go for the break. Uh, Students are doing the work. Just I am switching off my video only. Students are available. They are studying. I think everyone has studied it properly. So I'm going to take doubts. Does interim reporting means reporting during a financial year instead of at the end of the financial year? Interim reporting meant for that reporting is to be done. That is proper AS beta. This is just you have to write in your exam only one thing, that how it will be presented in AS 25. That is the only 2 points which you have to remember, because if I'll discuss that now, obviously I have to discuss the complete AS. So it is more than sufficient. Yeah, here is interested to have one example of questions from this AS. Sure, I'll find a question for you and discuss in the next lecture. You need not to worry. Sudhanshu Pandey, selling of subsidiary companies, discontinuing operation for holding companies. Selling of subsidiary companies, discontinuing operation. Exactly, but this is 100% right. When we sell a subsidiary company, obviously this means for discontinuing of our operations. Here, please explain again example of page number 1.117 for criteria A. Okay, 1.117. 117. Yes. Example for page number 1.117 for criteria A. Okay. That means for very simple that a company is interested to switch off its sports items or sports of segment. Then company has started first of all reducing purchases of that particular segment. In the first phase, we have reduced our purchases to 50%, and then we have reduced our marketing on that particular product. We have started reducing our marketing, started reducing our advertisement for the say for bringing customers to us. Simultaneously, we have done many other efforts for the same. In the next phase, we have stopped complete purchases of that particular item, stopped many other things, but marketing is yet continued for 20% of the existing earlier. Actually, we have some items left in our ground. We must have to sell those. So for that purpose, I'm doing marketing also, advertisement also. In the third phase, I have decided that now I am going to my stock is maximum sold off. Only few items have been left. Due to that reason, now I have stopped doing marketing also. Instead, I have started doing sale, or I have given a marketing or advertisement of a sale of a sports item at 50% of its price, so that the complete stock is to be sold off. And that is the third phase. In this phase, we are doing it. Going concern will be affected, but at the top of page 1.118, contrary is written 1.118. Top of the page. Defected. But this is a very important thing, beta Karthik and others. You must have to see what it is mentioned, because maybe we are unable to discuss it earlier. Here it is mentioned that if A Limited is going to close its, discontinue its sports department or sports segment, it doesn't mean for that A Limited will not continue. A Limited will continue as a going concern. As a going concern. Only sports segment is going to be closed off. So everything is to be done regarding that particular sports segment, but other segments are going to be continued. So the organization enterprise ability to continue as a going concern is not going to be failed. Let it be very much clear. It doesn't bring any question on the enterprise ability to continue as a going concern. Overall, as a whole, enterprise will continue. There's no problem. Only disclosure, only discontinuation is only for one segment. So only we are talking about one segment. If we are talking about as a whole, then enterprise ability is not going to subject to any question, because in that case we will assume that the enterprise will run as a going concern. But a particular segment is going to be closed off, that is a separate thing. Overall business has no effect. Overall business is not going to be failed for going concern. अगर हम लोग ये मान रहे हैं कि हमारा एक डिपार्टमेंट सेल हो रहा है या डिसकंटिन्यू हो रहा है, उसका मतलब ये नहीं कि बिजनेस बंद हो रहा है। तो इसलिए सारे बिजनेस को हम लोग ये नहीं मान के चलेंगे कि वहां पर गोइंग कंसर्न कंसेप्ट फेल हो गया। बिजनेस चल रहा है, एज इट इज चलेगा, कोई प्रॉब्लम नहीं है, वही गोइंग कंसर्न कंसेप्ट फुल होगा। लेकिन जो बिजनेस सेल होने जा रहा है उसकी बात हम कर रहे हैं, उसके रिगार्डिंग जो डिस्क्लोजर देने हैं, उसके रिगार्डिंग जो जो हमने करना है। तो जब डिसीजन फाइनल हो जाते हैं, जब सेल का रेट फाइनल हो जाता है, सब कुछ फाइनल हो जाता है और हम लोग ट्रांसफर कर रहे हैं गुड्स को, उस टाइम पर हम उसको सेल प्राइस पे शो करेंगे। बिफोर दैट तो वो अपने अपने प्राइसेस पे रहेंगे जैसे भी उसके प्राइसेस हैं, बिकॉज वी हैव टू गिव डिस्क्लोजर ओनली। See here it is already mentioned that we have to give disclosure. We need not to change the values of our assets and liabilities. Am I clear to you? I think everyone is clear on this. We have to go for the AS26 now. AS26. Example of this AS I'll discuss in next, because here it is not given any example. We will see an example in the next. I'll try to find it from somewhere in from your last examination questions or from somewhere, so that we can help. I can help you out that also. So intangible assets, AS26. What meant for intangible asset? Everyone knows it. Intangible assets meant for 26 is done, sir. Okay, sorry. AS26 is done. So we have to go for the next AS. No? So our two AS have been left now, AS28 and AS29. Okay, just a moment. Let's see which AS has been left. 4, 5, 7, 9, 14, 17, 18, 19, 20 we have done. 22 we haven't done. Okay. 22 we haven't done. 22 is left and 29 is left. So let's do AS22. Accounting for taxes on income. A very good AS. AS22 is very good AS, beta. Accounting for taxes on income. Be ready for a new thing. Tell me one thing, beta. Have you done income tax or not? Anyone who haven't done, just tell me. Have you done income tax or not yet? Income tax subject. Either in BCom or in CA inter, there's no problem. Have you done it or not? Just tell me. खुशी नहीं नहीं आई है हमारे लिए, है ना? Earlier खुशी has not sent even the morning to us. We were finding to try out that खुशी is available or not. Yeah, खुशी hasn't sent her presence earlier. बेटा send your presence at least everyone. तुम लोग अगर नहीं बताओगे तो मुझे पता कैसे लगेगा कौन कौन आ गया? It is always required. Your presence have a very great importance for me, because I feel that someone is listening to me, because I'm not able to see any face during this period. Sir, we have done IT, income tax. Yes, sir. Income tax classes I've done. Yes, sir. No matters, Khushi. Doesn't matters. If anyone join late, send presence at that time. It will always be good. So that I can understand that how many have joined at which time. It will also help me to understand. Doesn't matter. So AS22 is a good AS, having something different, not as a normal AS which you have started from AS4, AS5, because those AS are not correlated with any subject except AS7, which has been correlated with construction contracts of cost accounting. I already correlated with that construction contract. If you have done it will be better. You may do the questions there practically. So in the same way here, today we are going to discuss something very new, very different from the earlier studies. Purely different. Maza aa jayega. I would like to say it will be a really enjoyable. Just try to enjoy it. A person is going once a time. I have gone to Kasoli, and someone we are interested to go to Bhim Gufa. Bhim Gufa was in you may say in great heights of that Kasoli. So it was about 25 years back. So we are interested to go there. It was approximately 2 p.m. when we asked someone that we are interested to go there, tell us the path. They start laughing. We asked why we are laughing. They says that we are interested to go there. Normally people come back from there this time because that is not a normal way. That is a somehow different way. But I have gone. We have gone from Ludhiana so far, and we are interested to go there. So we haven't listened to them. We said there's no problem at all. We are interested to enjoy it, and the enjoyment doesn't have any end. So when we have gone there is you may say वो कहते हैं ना एक तरफ पे पहाड़ एक तरफ पे कुआं एक तरफ पे खाई तो दोनों चीजें थी but there was a very thin path which is going to that in big mountains we have to go there and we have started going there. We have reached there approximately at 5 p.m. but that was really an enjoyable event. Then we come back at 7 p.m. or 8 p.m. It was a dangerous way at that time, dangerous path at that time. That was really enjoyable. Whenever I memorize that, it is just something different which I feel now. So in the same way, beta, you must have to enjoy this AS because this AS is not as same as the normal AS where we say that this is done by us. So let's enjoy this. आप ना पेपर पर हम सर आप ना पेपर पर हम सबके नाम लिख के सामने लगा दो हम आपको मैसेज तो करते ही रहेंगे. You will also feel like a classroom. Exactly. I will do like that. Yes, sir. I have done direct text in group 1. Very good. Neela Bujo Mondal. Neela Bujo Mondal, you are from West Bengal, maybe, you know? Good. First time I have read your name because you have sent me message first time only. Let's start with this. Yes, an enjoyable event already discussed. Here, what we have to do, he says how to account for taxes on income. Taxes meant for income tax. That is very much clear. Not going to discuss about GST or anything else. So what this standard will tell us, it will discuss with us with a concept which is already done in accounting, matching concept. What means for matching concept? Tell me beta, what means for matching concept? Waiting for your answers. Matching concept. Two concepts are always correlated with each other. Periodicity and matching concept. Periodicity says all incomes, all revenues of a particular period means all revenue. must be entered in that particular period. And what I think, well, what how I define it, matching concepts meant for earning that revenue, whatever expenses you have incurred, that must be entered against that revenue. That is a matching concept. Matching concept is not in some other way defined because definitions are too lengthy. If you will see your CA foundation study material, you will see definitions are given on one page. I'm not going to do that. I'm going to give you a simple definition. Periodicity says revenues of a particular period must be entered in that period. Matching says all expenses incurred, whether paid or not, but incurred, must be entered against that revenue in that particular period for in which that revenue is entered. In 21-22, I have earned 100 crores, out of which 60 crore is received, 40 crore is yet pending. But I will have to enter 100 crore. I know it very well enough. Against that 100 crore, we have incurred 60 crores as an expense, which has already been paid off. 20 crore that is incurred by us, but not yet paid, that is outstanding. So that is also to be entered against it. And 5 crore is an expense which is not yet paid off, but it may be required to be paid off in the next period, in the next year, but it relates to the revenue earned in this year. Why? We think that 5 crore will be incurred to recover rupees 40 crore, whatever is not yet recovered. I am telling you, 40 crore is not yet recovered. So for recovering that 40 crore, we have to incur 5 crore as a collection expenses. We haven't incurred it. Even then it is required to be entered by way of creating a provision. You know it, no? What means for provisions? Prudence concept is always important due to this reason. It tells us whenever we are expecting any loss in future, that is to be entered today. So we are expecting that an expense of rupees 5 crore must be incurred for collecting this 40 crore. So that can be entered now by creating a provision for collection of amount from the debtors. One, I've sold a TV. Sorry, now at time we are not dealing in TVs now. I've sold LEDs to customers with a guarantee of 2 years. So what happened? I have sold LEDs during the year worth rupees 100 crores. Now this is my revenue. But one thing is very important. I have given guarantee for 2 years. So whatever expense I expect to be incurred to fulfill that guarantee condition, I think whatever I have sold during the year to satisfy the customers, to set up your guarantee condition, number of customers will come back to me and I have to go for repair expenses for those LEDs, and that may be approximately 10 crores, which is to be incurred in the next year and further next year. Means obviously 2 years is the guarantee period. Somehow guarantee will be given for selling in 2012, 21-22 is to be fulfilled in 22-23. So what I have done, I have created a provision for repair, which is worth rupees 10 crores. So what it is? This is matching concept, which tells us that if we have earned a revenue of 100 crores and expecting any expense which is to be incurred in relation to that particular revenue, that must be measured in the same period. Simultaneously, it is based on prudence concept. There is no worry. Both the concepts are giving their impact. Also, it is many other concepts which may help us. So concepts are correlated with each other. Very good. I gone to West Bengal, Nilabjo Mundal, just few months back in April and enjoyed Siliguri area. Really wonderful area. Let's go for the next. So here matching concept is to be followed. Simultaneously, we are talking about income tax. Now, whenever we are talking about income tax, tell me one thing. Income as per income tax and as per accounting is different or same? I would like to ask from you regarding business profession chapter. Some expenses are disallowed. Remember, if some expenses are disallowed, what it means for? If my income as per my books of accounts is rupees 50 crores, now few expenses are disallowed. If some expenses are disallowed, what will happen? Remember the business profession में होता है ना कि कुछ फर्क होता है उसमें. So assume expenses disallowed worth rupees 2 crores. So what will be your income as per income tax? 52 crores. So that he is saying that in number of cases, income as per income tax and accounting is different. So how it will be treated? Due to the difference in treatment of certain items under taxation law and where it is reflected in accounts. So we have to discuss about that accounting for taxes on income. It will describe the accounting treatment of taxes on income and follow the concept of matching expenses against revenues for the period. The basic criteria is we have to discuss about accounting treatment of taxes on income. Whatever tax we are paying on income. How to treat that in our books of accounts. According to my opinion, it is very simple. I have earned rupees 100 crores. So we people think, what do we think? That we have calculated income tax on it. Assume 20%. We have to pay 20 crores. That's it. It comes to an end. No, beta. It doesn't come to an end. There is something different also, which we will discuss within few minutes. So objective is very much clear. Matching of such taxes against revenues. So what are the reasons for that? Why the difference is there in taxable income and accounting income? Normally every student knows there is difference due to certain items which are not allowed in income tax act but entered in profit or loss account. Items. These items are allowed as a revenue or as an expense or as a deduction in your accounting, but not in income tax. Due to that reason, obviously their profit, their income, their net profit will be different. And one more thing is there, that is items are same. Item is allowed in accounting as well as in income tax both. But the problem is amount is not same. Like we are talking about depreciation. Depreciation as per income tax act is different. Depreciation as per accounting concept is different. So if depreciation is different, that means for amount is different. Depreciation is allowed in both. So when amount is different regarding any revenue or expense entered in profit or loss account, and the corresponding amount which is recognized for computation of taxable amount is different. So there are two reasons. Beta, keep it into your mind. One reason is that item is not allowed in one and but allowed in other, any item. Second is item is allowed in both, but amount is different for these two. In that case, it may be a problem for you. Accounting income, we know it very well. Total profit minus total revenue minus expenses incurred by us is equal to our profit or loss. But it is before deducting income tax expense, means profit before tax PBT is called accounting income. What is taxable income? This is again same, profit before tax as per income tax act. This is as per accounting concepts. Here we must have to define income tax also. Whatever is income tax, that is also to be defined, based upon which income tax payable is determined. Or you may say simple profit before tax as per income tax act. Here profit before tax as per accounting concept. What is tax expense? That is very much clear to everyone. Whatever tax we have to pay on that particular income. On which income? On taxable income. Because tax is not calculated on accounting income. Tax is calculated on taxable income. So whatever tax is there, that is our tax expense or tax saving. Number of times there is a refund also, that is a tax saving also. Now, very important word which we have to discuss, current tax and deferred tax. Charge or credited to the statement of profit or loss for the period. What it is? Current tax, deferred tax. You may assume in this way in the beginning, if my profit as per income tax act is 100 crores and tax is 20%, so it is 20 crore. This is what? This is tax. Very simple. It is to be bifurcated between current tax and deferred tax. How? Why? Let's discuss it. Current tax means the amount of income tax which is payable or recoverable in respect of the income earned by us during a particular period. And that income is a taxable income. That income is a taxable income, not the accounting income. That is known to us. Whatever amount we have carried, like I have discussed an example with you that on 100 crores we have to pay 20%. So it is 20 crore. This is a current tax. Let it be very much clear. What is deferred tax? That is a tax effect of timing difference. What is timing difference? We will discuss it. Any tax effect means amount of tax which is chargeable or recoverable within the next period, not in the current year, but in the upcoming period, due to the reason of the difference between income calculated as per accounting system and income calculated as per income tax system. As we have discussed, both have a different way of calculating income. Due to that reason, there may be a chance that whatever tax we are paying today, as we have discussed, that we are going to pay 20 crore today. But this 20 crore is calculated by way of an assumption, by way of disallowing, an expense worth rupees 10 crore. That expense is allowed in profit or loss account in accounting system, but that expense is not allowed in your income tax system this year. It is allowed to be entered in the next year due to any reason. Better. So it means for out of this 20 crore, if we will see 20% of 10 crore is 2 crore, means out of this 20, 2 crore will be reversed in the next year. I have to pay 20 crore in the current year. But beta issue is that when this 20 crore is calculated on 100 crores, this 100 crore profit is I have actual profit of 90 crores only according to accounting system. But we have to add some expenses which are disallowed as per income tax act, that is 10 crore. So my profit is 100 crore now. So actual tax should be 20% of 90 crore is equal to 18 crore, but I have to pay 20% of it is 20 crores, so I have to pay 2 crores extra. So that is called deferred tax. If we are expecting that this profit is just a this tax is just a tax paid due to timing difference, it will be recovered later on. If we are expecting this is called deferred tax. Am I clear? Write it down with you. Prabhas Chan, new name. Khushbu Pandey, please explain deferred tax again. I have not completed beta. अभी deferred tax चलेगा. Don't worry. Deferred tax ही तो चलता जाएगा. ये ES ही deferred tax है. आपको मुझे लगता है कि आपको पिछले ये समय लगे कि नहीं लगे? Just tell me. चलो ये आप सभी लोग मुझे बाद में देना, इसकी फीडबैक देना कि आप क्या क्या समझ रहे क्या नहीं समझ रहे. Exactly बेटा. गहन हरिराम, very good. गहनी हरिराम, a new name again, very good. So बेटा, whenever any income is changed due to allowance or disallowance in income tax act in comparison to accounting system, whenever there is a change, whatever tax is paid or saved on that particular change, that I am discussing, that is called deferred tax, because that is to be deferred. Deferred means carried it forward. Deferred means carry forward, means it will be carried to the next years for adjustment. Like in next year my tax is, assume my tax is 10 crores. So if I have already paid 2 crore in the previous years and that is required to be adjusted because it is allowed in the next year, this expense is allowed in the next year. So here it will be 8 crore, which is to be paid by us. Don't worry, I'll let you clear each and everything. Wait and watch. Yeah, what means for the timing difference? What means for deferred tax? The difference between taxable income and accounting income can be classified into two differences. So let it be very much clear. There are two types of differences. One is permanent and second is temporary difference. Timing difference means temporary difference, which is going to be reversed within the short span of time, within a year or two. But permanent difference is which is not going to be reversed. So permanent differences are not going to be kept pending, but timing difference is to be kept pending. That is to be shown in the books of accounts because it will be carried forward. So these are the differences between taxable income and the accounting income that originate in one period and are capable of reversal in the next period. Very good example is given to you. I have purchased a machinery for scientific purpose. Now for research purpose, it is fully allowed as a deduction in the first year because 100% depreciation is allowed for it. 100% deduction is allowed for it. But this is for income tax purpose only, not for accounting purpose. In accounting, we know it very well. Any asset will be depreciated according to its useful life. So as per AS6, we have to depreciate it. As per AS6, we have seen that if a machinery having a value worth rupees 1 crore, having useful life of 10 years, it is going to be depreciated as 10 lakhs per annum. But as per income tax purpose, it is allowed to be depreciated in the same year with rupees 1 crores. So due to that reason, what will happen? Expense allowed as per income tax act is much more than expense allowed as per accounting system. Due to that reason, what will happen? Your profit will decrease and tax will also decrease simultaneously. My profit is 5 crore as per accounting system. Now in that, depreciation already entered is 10 lakhs, but allowed as per Income Tax Act, it is 1 crore. So more depreciation will be charged, 90 lakh. My profit will reduce to 4 lakh, 4 crore 10 lakhs. So due to that reason, otherwise income tax is 20%, that is 1 crore. But here income tax is maybe 82 lakhs. So 18 lakh is paid in excess of the normal tax. So this 18 lakh will be a deferred tax. It is due to the reason of timing difference, because obviously within a 9 years, I'll write off the complete 1 crore rupees, because every year I'll write 10 lakh, write off 10 lakh rupees. So every year on this 10 lakh into 20%, 2 lakh will be adjusted. And within 9 years, 18 lakh will be adjusted. बेटा 2 crore कौन सा कह रहे हो आप? एक मिनट. हाँ, this 2 crore is a deferred tax. Exactly, बेटा. Akashil, this is, sir, video is not clear. Shri Ram says video is not clear. What others will suggest? Video is okay or not, beta? I'm waiting for 1 minute, because if video is not clear, I'm unable to proceed further. Do we treat deferred tax like capital expenditure? No. Wait and watch. We will discuss its treatment, Khushbu. Don't worry. Just clear the concepts first, because it is too early to give any answer. So deferred tax is, this may lead to recognition of deferred tax in the books. Okay. What is permanent difference? Permanent difference is due to the reason of unallowed, disallowed expenses. Like we know it very well that if we have paid any fine or penalty on income tax due to any such effort which has not been done by us properly, like we must have to pay the tax on time, we haven't paid the tax on time, for that reason we have to pay penalty on it or late payment, that is not allowed in income tax and will not be allowed in future also. So due to that reason, it will be considered as an expense in profit or loss account, but not in your taxable income. So this is a permanent difference. This will never reverse. So this is a permanent. Is that clear? Now, let's understand recognition. What means for the recognition? Here we are interested to discuss this thing. The tax expense for the period comprising current and deferred tax should be included in the determination of the net profit or loss for the period. Whatever income tax we have paid, whether it is current or whether it is deferred, we must have to adjust it in our net profit or loss account. Taxes on income are considered to be expenses incurred by the enterprise in earning income and are accrued in the same period to which they relate. So this is the basically matching concept. Is that clear? It will be entered in the books of accounts now by way of deferred tax assets and deferred tax liabilities. Means if we are going to get benefit out of it later on, like in the current year, we have paid income tax of, like in this case, here profit is 5 crore and tax should be 1 crore. But we have paid tax of 82 lakhs only. So 18 lakh is not paid yet. So what it is, we have paid 82 lakhs now because as per income tax, this will be a deferred tax liability. In case it is recoverable in future, it will be just a moment. Once more, I would like to check it out. Wait, I'm interested to define you what is a deferred tax asset and liability. Let's start with the definition. It will be better. Where the definition is given to you? No. Anything which is recoverable in future is an asset. Anything which is payable in future is a liability. No, that is not given here. So if we think that this is going to be recoverable in future, I'll take some examples for you. But before that, just try to understand. We have to present it in our books of accounts, in our balance sheet as deferred tax asset and liability. And what means for asset, that should be clear to everyone, which is going to reduce our expenses in future. Reduce our expenses in future. Just a moment. Give me a minute. Yes. So anything which is going to reduce our expenses in future is our deferred tax asset. Anything which is going to increase our expenses in future means which is payable in future is a liability, which is recoverable in future is a asset. So in the given case, what happened? We have paid this amount now, 1 crore. So this is recoverable in future because we have paid 82 lakhs. But here we have to pay otherwise 1 crore. So this is payable in future. So this is deferred tax liability. So in the previous one, here tax is 20 crore paid by us. Because expense is disallowed, we have already discussed. But otherwise it should be 18 crore. 20% is 18 crore. So we have paid 2 crore extra, which will be recoverable in future. So this 2 crore is our deferred tax asset. So anything which is recoverable in future is an asset. Anything which is payable in future is a liability. Sir, can you please explain how the 10 crore and 18 crore will be adjusted with the help of generator? Just wait, we will come to that also. I think till now everything is clear. Whatever we have discussed, just few examples may also be taken if required. Don't worry. After the break, we will go for that. So, beta, have a break of 10 minutes. Be fresh. Come back, and we will discuss this AS in such a way that it will be very easy for you. Give a good feedback for that, so that your mind will be satisfied that I have done something good. So, beta, coming back. Ashokji, have a break, please. Welcome back. So we were discussing on AS 22, an important AS from examination point of view. Already discussed many other concepts of this AS. Now I'm going to go forward with something which is important. First of all, he asked, it has been made clarified to you that tax expenses for the period. Just a moment. Actually, give me a sec. Only 1 second. Give me 1 second only, beta. मेरा मोबाइल पर let's start. Yes, we were discussing that how to recognize income for the period. It is current tax and deferred tax should be included in the determination of the net profit or loss for the period. Read it. If there is any doubt, just ask me. Recognition paragraph has already been discussed with you. Just one thing is important, that permanent differences are not required to be shown in your books of accounts as deferred tax assets and liabilities. Just you have to do one thing, that if we have a reasonable certainty that any amount will be recovered in future, then it will be treated as a deferred tax asset. If there is a reasonable certainty, it would normally be achieved by examining the past records. You can see the past records, whether an enterprise has an unabsorbed depreciation or carry forward of losses under tax laws. Deferred tax asset should be recognized only to the extent that this is virtually certain, supported by convincing evidence that sufficient future taxable income will be available against which deferred tax asset can be realized. That we have already discussed in this case also. That here we have here it has been mentioned unabsorbed depreciation. So unabsorbed depreciation or carry forward of losses under tax laws. So we have some unabsorbed depreciation or carry forward of losses under tax laws. Deferred tax asset should be recognized, but up to which extent that he is discussing, that we can show it as a asset, deferred tax asset, as it is given in this example also, that 18 lakh can be shown as a deferred tax asset. Now, how it will be measured? That is a point which is very important in this case. Current tax should be measured at the amount expected to be paid to the taxation authorities. Let it be very much clear. Whatever amount should be expected to be paid, it will be measured as amount expected to be paid or recovered from the taxation authority using the applicable tax laws. So whatever the applicable tax laws, that we have to see and calculate it. Then deferred tax assets and liabilities are usually measured using the tax rates that has been enacted by the balance sheet date. However, certain announcements of tax rate and tax laws may have a substantive effect in these circumstances meaning thereby it is very simple that if taxes your tax is 20% as on the date of balance sheet, and later on it changes to 25%, then obviously we have to apply 25% on this also. So there's no worry about it. Actually, government, whenever government announces a tax rate, that is normally with the substantive effect, means retrospective effect we can say, but retrospective effect I'm not saying in that way. Uh, my vision is very simple. Let it be clear. Like we are preparing accounts for 21-22, prepare its balance sheet. So if we have prepared its balance sheet, obviously at that time, whatever tax rate is there, that tax rate is normally applicable when we will actually pay it. So this is not going to differentiate normally. It is rare chances that in 22-23, government has issued a tax rate which is applicable for 21-22 also, which is rarely done. So it is not of retrospective, it will be of substantive effect, means substantive means whenever it will be you may say uh, prospective effect, upcoming effect. Timing difference, beta, what meant for the timing difference is that which is not going to reverse in future. For example, our profit is 10 crore according to accounting. So this profit of 10 crore includes some expenses like penalty paid to GST department or income tax department, rupees 1 crore, which has already been deducted out of it while calculating this particular profit of 10 crore, already deducted, because in books we are recording it. But for calculating income tax, you will have to disallow it because this is a disallowed expense. This is not an allowed expense. So it will be added back. It will increase your profit by 1 crore and your profit will be 11 crore. So this 11 crore profit will be used for the purpose of calculation of tax at the rate of 20%. So tax is 2.20 crores. Wherever it should be 20% of 10 crore, that is 2 crore only. So here we have paid 2.20 minus 2 crore, that is 20 lakhs extra. So whatever we have paid extra, 20 lakh rupees, that is what? That is to be assumed as permanent difference. It is a permanent difference. Because it is not going to be reversed. These are the penalties which are not to be disallowed later on. Whereas here depreciation of on the asset of rupees 10 lakh will be allowed in future, because we know it very well. We have purchased this asset for rupees 1 crore, on which depreciation of rupees 10 lakh per annum will be charged. So in 10 years, depreciation will be 1 crore. But as per income tax, full depreciation is charged in the current year, that is 1 crore. So here we can't say that it is not allowed in future. This time we have allowed 1 crore in the current year, that is in 21-22. Whereas 10 lakh per annum we have to charge from 21-22 to 29-30 in 10 years. So in the forthcoming period, it will be allowed as deduction. That it wants to see. Is that clear? Any doubt? Timing difference, permanent difference, all that is clear बेटा. देखो कोई डाउट है तो बता दो अभी, तभी मैं आगे चलूंगा. Any doubt to anyone? It's not typical, it's just a conceptual thing. You have to understand the concepts, it will be really very easy. Instead of adding back of penalty, the excess tax payable can be directly calculated. There's no problem, one and the same thing. But the concept is normally known to every student. Sriram, have you done income tax? In income tax, this is a concept that you will have to add back the disallowed expenditures for the purpose of calculating the income allowed as per Income Tax Act. Because in business profession chapter, this has already been done by. So due to that reason, we are doing that way. Here you can do, there's no problem. But it has been correlated with income tax now. Due to that reason, we are doing that in that way. We have to apply old rate or new change rate of government. Beta, we have to apply rates of 21-22. Whenever we are calculating profit for 21-22, we are calculating income for 21-22. We have to apply rate for the same. If government has not issued 21-22 rates till 31st of May 22, which is not going to, which is not a chance at any level. Normally, tax rates for 21-22 is issued by the government in the 21-22 itself or before that even. So, if the rates are not issued by the government, then we have to apply the previous rates. If rates are allowed, there is no problem. Here, what is interested to mention that we have earned profit of 21-22, calculated profit of that, calculated tax of that. Later on, government has changed that rate with retrospective effect. Government says the rates will be changed for the 21-22 also. Then we have to apply that rate. There's no difference at all. In that case, we have to go for the new rates. In that case, there may be a difference between the rates calculated, tax calculated as per the rates given on 21-22 and when we will actually pay it. So in that case, there may be a difference. That is interested to explain, nothing else, not typical, which is really a rare chance. Let it be very much clear, deferred tax assets and liabilities should not be discounted to their present value. As we are doing whenever any income or expense is to be incurred or earned in future forthcoming period, what we are doing? We are discounting it to its present value, but it is not allowed. Deferred tax and assets are not allowed to be done in this way. Very important thing which is normally done in each and every case, common concept of AS 22. There are two common concepts of AS, all AS. That is, whenever we have recognized any asset or liability or any other income or expense which is not actually earned by us, but we have shown it on provisional basis in our books of accounts. Means whenever we have created any provision or assumption or estimate or we have left something, it must be rechecked at the end of every year. And if there is any change, it will be entered in the books of accounts accordingly. These 2 points belongs to it. This is change in accounting estimates, change in our assets, our system. So that is interested to say. At each balance sheet, we have to reassess unrecognized deferred tax assets. If we have some deferred tax assets which have not been recognized by us because we think these are not going to be recovered with reasonable certainty or virtually certain. In that case, it is to be estimated at the end of each year. If it become reasonably certain at the end of any future years, then it is to be entered in the books of accounts at that time, which is normal thing. And if we have recognized any asset or liability in our books of accounts, then it must be checked at the end of each balance sheet date. If it will remain the same or any changes are there, those changes are to be adjusted in it at the end of every year. We must have to change the accounting estimate. It will be covered under a change in accounting estimate. Now, as per AS 22, There is no specific requirement to disclose current tax and deferred tax in the statement of profit or loss. But it is given in it is given in Companies Act 2013 that we must have to show it. It must have been disclosed. So preferably it will be disclosed in case of companies only. In case of proprietorship firms, partnership firms, HUF, AOPs, BOIs, trust society, it is not disclosed. There is no requirement of calculating it. There is no requirement of disclosing it. But in case of companies, as it is given in Companies Act 2013, it is required to be disclosed. The amount of income tax and other taxes on profit should be disclosed. AS 22 doesn't require any reconciliation between accounting profit and tax expenses. It doesn't need it. It will be disclosed in notes to accounts. The breakup of deferred tax assets and deferred tax liabilities. Otherwise, deferred tax assets and liabilities are to be shown in balance sheet, but its components, its detailed information is to be disclosed in notes to accounts. And it is to be kept separate in your assets and liabilities, because in assets and liabilities, we must have to disclose it. These are the deferred tax assets. These are the deferred tax liabilities. It is to be disclosed separately under a heading in the balance sheet, separately from the current tax. Nature of evidence supporting the recognition of these should be disclosed if an enterprise has unabsorbed depreciation or carry forward losses under a tax law. It is required to be disclosed. Offset means we can settle it. An enterprise can should offset assets and liabilities. That is current tax if the enterprise has a legally enforceable right to set off the unrecognized amounts and intend to settle the assets and liabilities on a net basis. Means whatever the current tax is there, that is to be basically he is interested to tell that we must have to disclose it in a proper way. And disclosure can't be on net basis, but it will be on net basis only and only if it is allowed as per if it is legally allowed. So legally allowed is rare chance. Here it means for we have a current asset worth rupees 10 crores, and we have current liabilities worth rupees 2 crores. So these are to be shown separately. That it means for. These are not to be shown as current asset 8 crore, 10 minus 2. That is not to be shown in that way. It will be shown as current assets 10 lakh as it is, 2 lakh, 2 crore as it is. Both will be shown separately. We can show it only on net basis only if it is legally enforceable right to set off the recognized amount and intends to settle the assets and liabilities on a net basis. And one more thing is there. An enterprise should offset assets and liabilities representing current tax with if the enterprise can. An enterprise should offset deferred tax assets and deferred tax liabilities. That I have already mentioned. Normally, we are not making our assets and liabilities on net basis. We are disclosing it in a proper way as normal. So that is interested to speak. Some relevant explanations are given regarding 80IA, 80 by IB, 180, 1A and 80 IA, IB section. So these sections basically talk about the disclosure requirement. On that basis, here it is very much clear that recognition of deferred tax assets should be subject to the consideration of prudence as laid down in AS 22. The timing difference which originates first to be considered to reverse first. Means if in case some deferred tax assets are there in your books of accounts, then these are to be reversed on their preference basis, on FIFO method basis. If a deferred tax asset in 2016-17, we have a deferred tax asset worth rupees 5 lakh. In 17-18, we have a deferred tax asset worth rupees 2 lakhs. 18-19, we have deferred tax liability. चलो इसी को लेके चलते हैं. 1 lakh. So in 19-20, when we have to reverse it, we have to reverse first of all this 5 lakh in 19-20, and then turn of this will come, and then turn of this will come. You must not have to adjust it out of it. The FIFO method is to be adopted for this purpose. बेटा लेट इट बी क्लियर, एक बार समझ लो दोबारा से कि जो हमारे ये एक्सपेंसेस या इनकम जिनकी हम बात कर रहे हैं, जिनको हमने डेफर्ड टैक्स एसेट के रूप में किताबों में रखा हुआ है, इसको फीफो मेथड से आपने रिवर्स करना है. मींस जो पहले आपने डेफर्ड टैक्स एसेट क्रिएट किया है उसको सबसे पहले रिवर्स करना है, क्योंकि ये होता तो रिवर्स करने के लिए तभी तो टाइमिंग डिफरेंस कह रहे हैं इनको, बिकॉज ये टाइमिंग डिफरेंस का मतलब क्या है कि जिसको हम लोग आज क्रिएट कर रहे हैं एसेट या लायबिलिटी को, और फ्यूचर में हम उसको रिवर्स कर देंगे, उसी को टाइमिंग डिफरेंस कहा गया है. परमानेंट डिफरेंस को तो किताबों में डालना ही नहीं है, बिकॉज उसको तो रिवर्स नहीं कर सकते, वो तो खर्चा हो गया हमारा, वो तो एक्सपेंसेस हो गए. इनकम है तो इनकम हो गई, जो है वो हो गया, कोई प्रॉब्लम नहीं उसकी. पर अगर हमें लगता है कुछ एक्सपेंसेस ऐसे हैं जो हमने अभी टैक्स पे कर दिया है, लेकिन ये टैक्स बाद में हमें बेनिफिट मिल जाएगा, वापस मिल जाएगा, या अभी हमने टैक्स नहीं पे किया बट बाद में हमें पे करना पड़ेगा, उसको हम डेफर्ड टैक्स एसेट या लायबिलिटी के रूप में टाइमिंग डिफरेंस के रूप में रख लेते हैं. टाइमिंग डिफरेंस को ही एसेट या लायबिलिटी कहा गया. तो जब उसको रिवर्स करना है बाद में, तो वो फीफो मेथड से करना है. कई बार क्या होता है, फर्स्ट ईयर भी आपका एसेट क्रिएट हो गया, सेकंड भी क्रिएट हो गया, थर्ड भी हो गया. अब फर्स्ट ईयर क्रिएट हुआ डेप्रिसिएशन में से, सेकंड ईयर किसी और पर्पस से क्रिएट हो गया, मतलब कोई और ऐसा एक्सपेंस था जो डिसअलाउड हो गया, थर्ड ईयर में कुछ और हो गया, तो पर्पस ही अलग अलग थे. तो जब रिवर्सल होगा तो सबसे पहले तो ये 5 लाख वाला ही रिवर्स होगा, फिर 17-18 वाला होगा, फिर 18-19 वाला होगा. ये नहीं होगा कि पहले इसको रिवर्स कर दो पहले इसको कर दो. ठीक है ना. One more thing which has been asked by Shri Ram regarding Companies Act. Companies Act and Income Tax Act may also differ. Due to that reason, expenses and incomes may also differ. Due to that reason, there may be a chance of deferred tax in that case. Because Companies Act is something like accounting method, and Income Tax Act is income tax. Let it be very much clear. A great thing has been asked by Shri Ram. बोलते हैं तो बड़ी बात करते हैं, छोटी मोटी बात नहीं करते. देखो, in case of other accountings, in case of accounting of proprietorship and other organizations except companies, we are talking about companies. So it means for private limited and public limited and LLPs. Thrice has been left because on LLP also Companies Act is applied. So accounting of proprietorship and other enterprise, one thing is very much clear, we are talking about profit as per accounting system. But whenever we are talking about companies, that means for we are calculating profit as per Companies Act, because Companies Act meant for the accounting system. Their profit of accounting is calculated as per Companies Act. Companies Act क्या है? But Companies Act says, Companies Act says that profit is, books of accounts are to be prepared according to this system. In Companies Act, profit is calculated as per books of accounts, because whenever we are preparing books accounts as per books of accounts, that means for we are applying Companies Act. And Income Tax Act doesn't varies for companies and proprietorship separately. So due to that reason, we have to calculate profit as per Income Tax Act. Income Tax Act doesn't say something different for proprietorship and companies. In accounting, we are saying that companies have some different way because on companies, while preparing books of accounts, Companies Act is applied. So मेरा कहने का मतलब सिंपल, my meaning in Hindi is very simple कि जब हम बुक्स बनाते हैं तो प्रोप्राइटरशिप फर्म के केस में, अदर बुक्स के केस में हम लोग जो बात कर रहे हैं कि बुक्स ऑफ अकाउंट्स के हिसाब से या अकाउंटिंग सिस्टम के हिसाब से प्रॉफिट निकालेंगे। कंपनीज एक्ट में जो कंपनीज एक्ट के हिसाब से प्रॉफिट निकालते हैं, बुक्स ऑफ अकाउंट्स का प्रॉफिट ही होता है, वो अकाउंटिंग इनकम ही होती है, वो कोई और नई चीज नहीं आ जाती। कंपनीज एक्ट ने जो बताया है वो अकाउंटिंग के हिसाब से ही बताया है कि अकाउंटिंग इनकम कैसे कैलकुलेट करनी है। सो ड्यू टू दैट रीजन यू नीड नॉट टू वरी अबाउट दिस थिंग। अकॉर्डिंग टू माय मीनिंग इट इज क्लियर कि हम लोग, और ये डेफर्ड टैक्स आएगा भी कंपनीज के केस में, प्रोप्राइटरशिप फर्म वगैरह के केस में आता ही नहीं है। मैंने बता ही दिया कि बुक्स ऑफ अकाउंट्स में आना ही नहीं है ये अदरवाइज, क्योंकि कोई और तो शो करता ही नहीं है, सिर्फ कंपनी शो करती है। बिकॉज एएस ने 22 की जो एप्लीकेबिलिटी है जिसकी हम बात कर रहे हैं, ये मैक्सिमम जो एप्लीकेबिलिटी है ये इसी पर है और किसी पे नहीं। लाइक फीफो बिल्कुल सही है। Gehani balance sheet, either DTA or DTL will be shown. Exactly, this reversal should always be fixed. Sir, these are reversed for the payment of tax purpose. Is it right? Yes, beta. Sir, as per section 198, profit is calculated for the companies. Exactly, beta. I think everything is clear to everyone. So due to that reason, some clarifications are also issued later on regarding 10A and 10B in case of those trusts which are taking tax exemptions. So in that case also it has been made clear that it should be not be recognized to the extent deductions from the total income. He says deferred tax in respect of timing difference which originate during the tax holiday period. Tax holiday means maybe you have listened about the word tax holiday. Tax holiday means government says if you will work in this particular area, then you will be given a tax holiday for 10 years. Means you will not pay any tax during that period. That he is saying the deferred tax in respect of timing difference, which originate during the tax holiday period and reverse during the tax holiday period, should not be recognized to the extent deductions from the total income of the enterprise is allowed as per the provisions of section 10A and 10B of the Act. In Income Tax Act, 10A and 10B section is very important. Those who have read it very good. Those who haven't read it must read it. Only then they will be clear on this concept. Here he is interested to talk about tax holiday covered under section 10A and 10B only. So it is not beneficial for me if I'll discuss 10A and 10B in detail here. It is better you may read it. In this practical concept of deferred tax and liability is only simple, that deferred tax in respect of timing difference which originated from the tax holiday period but reversed after tax holiday period should be recognized in the year in which the timing difference originates. But in case if this tax holiday, if timing difference originate during the tax holiday period and reversed during the same, should not be recognized to the extent deduction from the total income of the enterprise is allowed under the Income Tax Act. In simple words, deferred tax asset should be subject to the consideration of prudence as laid down in 22. So it is just a detail given to you, and I think it is not too much important. You may just, because if I'll try to explain it, it will be more difficult for you to understand. This has already been clear. Virtual certainty supported by convincing evidence means any deferred tax and liability is to be entered only and only if it is virtually certain that this will occur in future. Yeah, these are good things. I would like to come to these examples so that you can understand it. Here it is given to you. Rama Limited has provided the information. As per accounting record, 2 lakh is our depreciation. As per depreciation, as per Income Tax Act, it is 5 lakh. So first of all, try to understand these two. There is adequate evidence of future profit sufficiency. How much deferred tax should be recognized as transitional adjustment? So first of all, try to understand this thing. The depreciation in the given case is 2 lakh according to accounting records. And as per income tax, it is 5 lakh. So as per income tax, we can charge more depreciation by rupees 3 lakhs because actually it is 2 lakh as per accounting system, but income tax allows 5 lakh. So we can charge 3 lakh more. But we know it very well, depreciation is always reversed in future because the value of asset cannot be changed by the income tax act. If an asset is purchased for 10 lakh, it will remain 10 lakh for both as per income tax or as per accounting system. Only depreciation can be changed, that in income tax we can charge it for 4 years 2.5 per annum. In accounting we can charge it for 10 years as 1 lakh per annum, like that. But in this case also 1 lakh into 10, it will be 10 lakh, and here also 2.5 lakh into 4, it will be 10 lakh. So due to that reason, it is always a timing difference. So it is timing difference, and we have already, what we have done, we have already reduced our tax. We have reduced our tax. Actually, what happened, if our profit is 10 lakhs, as per accounting system, we have to calculate tax on 8 lakh at the rate of 50%, that is 4 lakh. But in the given case, what happened, 10 lakh minus 5 lakh, profit reduced to 5 lakh, and tax is 2.5 lakh only. It means so we have saved how much tax? 1.5 lakh, which is to be paid by us in future. So this is a deferred tax liability of rupees 1.5 lakh. My calculation, my concept is clear to everyone? Tell me. Is that clear? This is the practical example which you should have to understand. Very good. Tell me if it is clear or not. Another thing is some unamortized preliminary expenses as per tax records. What it is? Unamortized preliminary expenses as per tax reports. That means for this amount is not to be written off. Due to that reason, profit will increase. Unamortized preliminary expenses as per tax records. As per accounting, we have reduced it. So our profit has been reduced. But as per income tax act, profit is more. Hence, we have to pay tax, more tax on this 30,000. Assume in this case, if we'll understand, then the profit will, we have write it off in our accounting system, that is 4 lakh. As per accounting, our profit is 3,70,000. Whereas income tax has not allowed it. Income tax has assumed the profit as it is of 2.5 lakh. So we have to pay more tax on 30,000. 30,000 into 50%. So this is 15,000 rupees. We have paid more tax. So this is our deferred tax asset because it will be reversed in future. Because in this year we assume that our preliminary expenses are written off as per accounting. It is 1.1 lakh 30,000. As per income tax, it is 1 lakh. Calculation difference is there, which will be changed later on because it is preliminary expenses are to be written off in future today or later on. There is no problem at all, but it is not yet written off because this is a concept here. So due to that reason, 15,000 is the deferred tax asset. So net deferred tax liability is 1,35,000. That's it. Another example. Read this example. This is a practical case study. It always happens because I already mentioned you. It is applicable in companies wherever the companies come to you. Book MAT comes to you. Have you studied MAT? This is a part of your Companies Act. company law. So if you have studied it, very good. Otherwise, try to understand by way of example. As per MAT, profit is calculated in a different way because MAT is applicable according to Companies Act 2013. We have to calculate the book profit in that case, and on that book profit, whatever the profit is there, whatever the tax is there, we have to pay that additional tax to the government. That additional tax to the government. Here, profit is accounting profit is 6 lakh. So on that, 20% is the tax rate. So actually, our tax should be 1 lakh 20,000. But as per Income Tax Act, how much is our tax? Only 12,000. As per MAT, it is 7.5% of book profit. So get it how much it is? 26,250. As per Companies Act, what you have to do is whatever profit is as per Income Tax Act, that is 12,000, that is not to be paid. Instead, you have to pay profit tax as per book profit. So you have to pay 14,250 extra because you have to calculate tax as per Income Tax Act and tax as per MAT, whichever is higher will be paid. So you have to pay 14,215, 26,250 in this case. One thing. Further, we will understand remaining things, but first note it down. First note it down. It may be given in solution also, there's no worry. Yes. So what is your tax expense? Tax expenses, we know it very well that we have to check it out how much tax is payable. We have to pay total tax, that is current taxes. How much is the current tax in this case? Current taxes, yes, current tax. We can say the tax to be paid in this year, that is 12. Simultaneously, we have to calculate deferred tax. What is deferred tax? Difference between the tax calculated as per accounting profit and the tax calculated as per income tax profit. That is 1,20,000 minus 12,000. So it is 1,08,000. This is called deferred tax. So it is not paid yet. It will be payable in future because current year you have to pay only 12,000. Actual tax is 1,20,000 as per accounting system. But we have to pay whatever is calculated as per Income Tax Act. So that is only 12,000 which you have to pay in this year. In future we have to pay it. So that reason this is a deferred tax liability. Whatever is payable in future is a deferred tax liability. We know it very well. Now, one more thing is there. In addition to this, what do we have to pay extra? We have to pay as per the MAT also. As per MAT, 14,250 is an extra tax which is to be paid by us. So amount of tax to be debited to P&L account. See here it is. Our current tax is 12,000. Okay. Deferred tax is 1,08,000. Then we have to pay in case of companies excess of MAT over current tax, that is 14,250. So that is to be paid. So total amount to be debited to P&L account is 1,34,250. This is not going to become a deferred tax as such or liability because it is not going to be recovered in future years. It is not recoverable. It is not recoverable. Let it be clear, beta. Is that clear? So in profit or loss account, how much total expense will be entered? 12th one is paid. Matching concept is there. Na? We have to enter the total expenses today, whether it is recovered or not. It will be recovered in future. There's no problem. But today we have to enter all the expenses, all the tax in our profit or loss account. Because in case of companies, tax is allowed as a revenue expense, just like a normal expense. So one student has asked regarding how preliminary expenses is deferred tax excess. It is just like a depreciation. Like depreciation is unamortized, means depreciation is not written off yet. So that is just like same preliminary expenses are to be written off as per, are not to be written off as per Income Tax Act by rupees 30,000. But in accounting we have write it off. So our profit is reduced in accounting, but in income tax our profit is more. Due to that reason we have to pay more tax. If we have paid more tax, what it is? It meant for we have paid more tax. It is our deferred tax asset because it will be recovered later on. Assuming everything is clear, beta. Illustration number 3, 4. We have to do. Read the last AS 29. We will meet in the next lecture. Also, I suggest you to do all the practical questions, all the MCQs, all the practical case studies given at the end of these AS. If you will see at the end of these AS, there are many illustrations, questions, and practical case studies, MCQs are given. See, here it is. All that is given to you for your better understanding. You may see it at the end and do it. I suggest you to do all this within the short span of time. I'll also try to take doubts of those if it is possible. But I suggest you to first of all cover the AS, and then you will have to go and do those. Also do all the 10-year questions, because it will minimum cover 30 marks of your paper, beta. And 30 marks are very important. You know it very well. If you will not understand AS in a proper way, you will be unable to get good marks in accounting. If you will not get good marks in accounting, your group will not be clear. To clear this group, you need minimum 80 plus marks in accounting. To get 80 plus marks in accounting, do one thing: get 25 to 35 marks from AS only. Remaining is only 50 marks liability, 55 marks liability on the remaining chapters. Obviously, that will be covered because I'll take next few lectures for the next few chapters, and those chapters also cover minimum 10 marks of your paper, 10 to 15 marks. So that means for I'll cover minimum 40 to 50 marks of your paper, which will be very fruitful. You may say 50% of the paper is covered in this only 12 or 13 lectures, whatever we will take, and the syllabus which we have covered. Don't try to take stress of anything. It will be really very easy and you can do it. Just try to understand the concept. All the best. We'll meet in the next lecture. Thank you very much. Sir.